cast your mind back to 2009 in the financial crisis when Liberty took a lot of criticism for what was considered a hedging program. In fact, what we were doing is de-risking a highly risky balance sheet. And we did that through the establishment of what we call LibFin. And their job is to manage the market risks to which we're exposed, and they're managing those very well. So you'll see that there's much lower volatility in our earnings. We're using much less capital to support what we do as a result of the hedging activities that they conduct on our behalf. And then we also had a problem at the same time with customers leaving us, and that was referred to as the persistency problem. So we had to solve that problem, and we've done that through a number of initiatives. We obviously had to re-engage with our customers. So we've put a lot of effort into talking to our customers, finding out what it is that they need, finding out what it is about the service proposition that isn't working for them, changing the way we service customers, changing the way we engage with customers, also understanding the data that we have on our customers. So properly using the data that we've got to understand our customer behavior, and then targeting our efforts from a sales perspective using that data.
You saw during the tough times a massive outflow of customers. Now that you're talking of the customer retention strategy that you've embarked on and even increasing market share, are you seeing old customers returning? Are you seeing a complete new customer that is coming to Liberty?
We are seeing old customers returning, but interestingly, the customer base is starting to more kind of accurately reflect the demographics of the country. So we are getting to those parts of the market that we didn't serve traditionally.
Let's also touch on market share. How are you planning to increase this? And the fact that we've actually seen such a strong turnaround, some would argue that you cannot actually maintain this upward momentum. And as I mentioned, a 46% increase in earnings on the retail side of things. Can we expect these kind of numbers going forward?
Look, I think the increase in the earnings in retail is, you're not going to see another increase of 46%, but you will see an increase in earnings. I think the business has established some real kind of momentum. So as I said, we've solved the balance sheet problems, we've solved the persistency problems, we've refreshed our product sets, we've re-engaged the sales force, and you'll see, I think, from the statistics that come out, that we've taken back significant market share in the broker space, and we intend to maintain that growth.
And as you mentioned, Bruce, a few years ago you were very criticised for the hedging strategy that you embarked on, and also for a very weak balance sheet, some would argue. Do you think that if we do see another downturn on a global level and even in South Africa, that you are in the position to weather any storm?
Absolutely. I think that we're very strong from a capital perspective. I think so. We've got a lot of capital, and I think that the skills that we have to manage our balance sheet are unique in the industry. What we do in managing our balance sheet, I think, is unique in the industry. I mean, it's interesting. We've had quite a lot of interest from variable annuity insurers in America looking at what we've done here, because their hedging programs didn't work in the crisis, and ours are working. So there's quite an interesting dialogue taking place with them.
Would you say that Liberty is far more conservative? I mean, you're talking about de-risking balance sheets. Are you taking a conservative stance, and are you planning to change that anytime soon?
We're taking a conservative approach to market risk. I mean, we are in the business of insurance. We're not in the business of taking bets on the market. So inevitably, some of the products that we sell contain market exposures, and LibFin's job is to minimize that exposure. But what I think we need to be doing is using our capital to take more insurance risk, which is higher margin risk, and therefore produce a higher return on capital and better earnings for shareholders.
Well, let's just touch on LibFin, because we saw earnings generated just under 1 billion rand for the year. Are you expecting this kind of number into 2012?
LibFin's earnings really come through from two areas. The one is they manage what we call our shareholder portfolio. So those are the assets that we hold to back the liabilities that we have to our policyholders. And that portfolio is really invested in it's basically a conservative balanced portfolio. And the returns that portfolio will generate will be a function of the asset class returns for the course of 2012. And the long-term return assumption is something in the order of 9 or 10%, and we would expect it to generate something like 9 or 10%.
Let's touch on health, because this is a smaller part of the business, but it seems that you have embarked on operational changes in the previous year. How large do you expect this business to go, or are you still going to consider it as a smaller part of Liberty?
Look, I think it obviously is a small part of our business right now, but I think it really is an investment in the future. So there are two components to health. In the South African market, we believe that we can provide an administration service to medical aid schemes, which is competitive. We also have probably the best software, which we own, which we sell to medical aid administrators. And then we also, provide managed care services. And we think that working with our kind of flagship client, which is the Liberty Medical Scheme, which is an independent scheme, we believe we can significantly grow their membership through our sales force. So the sales force that drives our retail business will be selling that health product. Then in Africa, the view there is that what we're really doing in Africa is we're selling an insurance product to corporates. We're saying to them, we will provide your employees with a health solution. So we engage with providers of health product. We provide them with the administration services, and we say to them, we will absorb those costs. This is the benefit structure. So we're essentially creating an insurance business, an insurance customer base in Africa.
How many corporates are you working with across the African continent? And I know that you finalized the acquisition, 57% interest in CFC Insurance. Are you working through them?
We work with a large number of corporates in Africa. So Guinness, MTN, a large number of other big telcos, real blue chip companies who have big businesses in Africa. We have them on the client base. But our biggest opportunity is to distribute this product into the Standard Bank corporate customer base in Africa. They have 55,000 customers. And we haven't really started to scratch the surface there yet.